Hello and welcome to This Week in Bitcoin. There's been a lot of news this week as well, so let's get stuck in right away. News number one come out of Cambridge, and they're an interesting news aspect for every miner, especially mining researcher out there. And that is that the Cambridge Center for Alternative Finance has released an update to its Bitcoin mining study. Back in 2022, the report stated that Bitcoin uses roughly 37.6% of renewable energy, of green energy, stating that, the industry is getting greener and stuff, but it's still lacking the majority to say it's definitely a net benefit for the environment. Many researchers in the mining department actually had a lot of criticism for this study back in 2022 because it was neglecting a lot of hydropower, solar power, and in some cases as well, totally neglecting first-party data. Nowadays, or just a couple of days ago, the Cambridge Center for Alternative Finance released the second version of that study, and it has some interesting data in there. Point number one is that Bitcoin is now using roughly 52% of renewable energy sources. If you break that down, there is a roughly around 9% in actual nuclear energy, which they also categorize as renewable energy now, and more or less 43% in actual renewable energy, from hydro to wind to solar and to other alternatives where you, for example, use flaring gas and then turn on the miners. That is a significant shift, and if you actually read the whole report, I will link it below the video. It's quite a long one, so you have a lot of stuff to figure out. You will also see things where the report went into if actual miners are also committing to climate goals, because companies at the end of the day also have to do the checks with how much CO2 is being emitted, how they prevent from anything happening to the environment surrounding the site, and all of these different metrics. Everything is listed in there, and it's particularly interesting to see because they've also been myth-busting another thing where it states that Bitcoin has been using a lot of energy worldwide. If you actually compare it to what's in the report, they say 0.5% of global energy is being used, roughly around 138 terawatt an hour per year. So in comparison to other sectors, that is minor. And considering how fast the adoption has been growing amongst miners with the switch to renewables and to other alternative solutions as well, they are very keen to see that this number will increase as well. So good news for every miner out there. We can now stop fighting the FUD. Considering that we have other reports from KPMG as well, stating the same obvious data, we could say that Bitcoin has now become a green industry. Second news are exchange news, and that is that the Bitcoin volume on exchanges is at a 7-year low. This indicates two things. We do see a lot of inflows, so people are buying Bitcoin, but they're not holding the coins on the exchange for a long time, stating that they more or less move it off the exchanges, therefore dropping with the exchange volume. This is crucial for two things. A, we obviously want to see a buy side. The Bitcoin price has been steadily rising again. The tariff shock is over. And with the third news now, you'll see why that might be the case. And secondly, more importantly, something we obviously also encourage is that people are actually moving their coins into self-custody, preventing the third-party risk and making sure that no one has actually access to their Bitcoin. And the third news, as I stated, has a little bit something to do with the price and the narrative surrounding Bitcoin, because a report out of Cointelegraph states that Bitcoin could profit heavily from gold's current rally. The gold rally has been impacted by various things, but mostly by a lot of buying pressure from central banks. When central banks buy gold, you almost are certain that they are hedging or protecting themselves against uncertainty in the markets, which we are seeing now with the tariffs and everything. And secondly, obviously, gold has always been a backing mechanism for central banks as well. Now, Bitcoin has been, just like gold, profiting. At this point in April, it even has outperformed gold by almost a factor of 2x. And considering that you see more and more narratives breaking through that Bitcoin is digital gold and that it is a protection against whatever you want to do, currency devaluation, hyperinflation, maybe in some countries even inflation, having that narrative breaking through and seeing that Bitcoin is associated more with gold could indicate, according to the Cointelegraph, article and report that we would see more price movements there. I guess we'll need to wait and see what we'll do, but for now, digital gold is outpacing physical gold, and we will see if central banks are also realizing this and potentially establishing a strategic reserve, or just leave it be for us plebs to actually buy more digital gold. And with that, we're at the end of this week in Bitcoin. You know the drill. If you got questions, feedback, or just want to say hello, leave me a comment below, and I look forward to seeing you next week again.